Right, we're going to have a look at this Cotes Limited question. It came from the 7126 paper, AS paper in 2019, and it's one asking us to make a distinction between capital and revenue expenditure. So remember that revenue expenditure is anything incurred on the day-to-day running costs of the business. Capital expenditure is the purchase of non-current assets, and included with that is anything that gets the asset into a usable location and into a usable condition. So anything involving site preparation, delivery, testing of the asset is included as capital expenditure. But anything to do with ongoing running of it, so including things like staff training, maintenance contracts, that kind of thing, is going to be included as revenue expenditure. So it tells us they've got a year end of the 30th of April. Right at the start of the year, 1st of May, they paid for and installed a new computerized till and inventory control system. And they've paid the following amounts that relate to the purchase and the installation. So we've just got to sort out what's capital and what's revenue. So the delivery costs of the computer and tills is going to be capital because we've got to get them into a usable condition. So without paying the delivery costs, we're not going to get them to where they need to be. Now, the maintenance is going to be revenue, but we have to be careful with this because the maintenance contract is for 2 years. And obviously, our accounts are only for a period of 1 year. So we need to reduce that to £400. Purchase of the computer and tills, clearly going to be capital. That's part of the original cost. And then the same with the inventory control software. It's a sizable amount, £6,000. You could argue that software is a revenue expense, but it depends on the nature of the software. I would say this is a sizable amount, and because it's inventory control software, that's liable to last for a few years. If this was something like payroll software that we'd have to be updating and renewing and buying new stuff every year, then I'd say definitely a revenue cost. But I think for this one, we can argue that it's capital. And staff training costs are always revenue expenses. You've got no guarantee that your staff will stay around, so they're not going to form part of a permanent asset. So staff training costs are always treated as revenue expenditure. So to find the answer then, we've just got to add £500 capital expense there, 85,000 there, and £6,000 there. So the capital expenditure, 91,500, and the revenue is the 400. It's half the maintenance, remember, just for 1 year, 400 plus 7,600 there. So we've got £8,000 in revenue expenditure. So 6 really easy marks in the bag. Thanks for watching.